The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 8th Weird Wednesday edition of today's Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we do everything we can to have an extraordinary Wednesday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to throw at us. Today, we'll go looking for those gifts of the Bulls and the Bears. We're also going to take a look at what's going on right now with regard to the issue that the NYSE is dealing with, and we're going to do it with our technology expert here at TFNN, Mr. David White. So we're going to do that in just a moment. I'm absolutely, or both of us really, we're grateful for your presence here today, and we're here to serve you. So feel free to call on in at 877-927-6648. Of course, internationally, you can pick up that phone, dial on it at 727-445-1044 on this wonderful Wednesday. Of course, it is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 187 points. The S&P is off 25. The Composite's down 69. The Russell's off 16 points out there. And as I mentioned, at about 11:30 or so this morning, the New York Stock Exchange, which handles about, David, maybe he'll be able to correct me here, somewhere around 20% of the order flow that takes place. They shut down. Things were halted. So there's some kind of technical issue or glitch. We don't know what it is, but maybe our man David White has some type of suspicion. So let's go to our technology expert here, David White. David, how you doing this afternoon?
Doing fantastic.
Hey, thank you, and thanks so much for coming on to the show. I know you've got the you take care of the next hour, but you are the technology expert here, clearly. So, just your take on maybe what's going on. I know that one of the things over the past couple of weeks, I've heard you mentioned a new show that's on. I've seen you post a few things in the den. I haven't watched the show. I think it's on. Is it on USA Network?
USA Network, Wednesdays at 10 o'clock.
And it's a show called Mr. Robot. So tell us about the Mr. Robot and what's going on, and I'm going to have to go. And how long has that been? How many shows have they done so far? Do you know?
Yeah, they've done 2 shows. But this is in a world where shows get 3 and 4 episodes and then they're canceled.
Yeah.
This show, before the first episode aired, they signed up for 24 of them. I think.
Oh, really?
If you watch the first episode, you're going to go, okay, here's the next Breaking Bad. It's that, right? You knew right away you were hooked on the story. And the story basically is a bunch of disaffected individuals that want to go hack Mr. Corporation, right?
Yes,
And in fact, it's pretty funny because if you watch, they bought the Enron E to set out in front of a building to do some of the filming for, right?
Okay.
So they're going up against the evil corp. And they actually call that in the show. Everything is pretty much spot on, but then they nod their hat to the evil corp, right? Which is the Enron E at the 45.
Yeah, absolutely. Yeah. Now, what we want to tell folks is that, look, there's absolutely been there's trading that's continuing inside the market. What I've got up on my screen right now is really the order flow. If we take a look at the different market makers out here, you're dealing with the Direct Edge, you've got BATS, you've got National Market Systems, all of the electronic communication systems out here. And so the NYSE is roughly about 20% of the order flow, somewhere right around there?
The actual volume is around 25% last I looked.
25%. Okay.
Now,
So look, it is a big thing for that exchange to shut down. It is the moniker, right? It is the name. You know, I take a look at what goes on inside the New York Stock Exchange, so it is a big deal.
Well, first of all, there is no floor trading anymore, really, to speak of, right?
Right. Correct.
If you take a picture, in fact, there's occasionally you'll see them do a wide shot of the floor on the New York Stock Exchange on CNBC or Bloomberg or anything.
Yes.
And you'll notice that there's about 5 people in the background, and then occasionally they'll make a mistake, and you'll see the wide open thing, and you'll see that there's nobody there.
Right.
Basically, the 5 people mill about behind the camera so that you see them behind the talent talking. There's almost nothing that goes on there. It's all stage front. The exact same thing happens with the NASDAQ with their quote market site down in the square. What is that? Times Square.
Right. Well, and so it really kind of is apropos with regard to. I mean, I do remember watching the trailer for Mr. Robot, and it's really all about it's a hacking, and we're not saying David and I do not know what's taken place here at this stage, but as David's pointing out, there's very little floor activity. If anything, it's just there simply from a dress standpoint, I suppose.
Yes.
But so any thoughts that you've got, I just wanted to make sure, you're a technology expert out here.
Yeah. And
so I think it's most important for us here at TFNN to go directly to you with regard to any thoughts or anything that you'd like to share, with the audience here. And I know you'll cover it more during your 2 o'clock show. So this is really a plug for your 2 o'clock show.
There are several things, but I think there were kind of a confluence of events over the last couple of weeks. But I wrote in my newsletter about the parallels that I saw with this hacking show coming out every week, kind of a hit between war games and those folks that were running around blocking Wall Street last year or year before it left. What was it? Disrupt Wall Street or whatever.
Sure. Yeah,
whatever those smelly hippies were doing in New York. But it was it's kind of a combination of that. And I said, back in 1983 when War Games came out, within about 2 months, AT&T had to put barbed wire all over their switching station everywhere in the cities that I was living at because suddenly everybody became a hacker. So I said, it's going to look glorified. It's kind of like Breaking Bad. Everybody started thinking they could make meth in their house. And suddenly all these mobile homes out in the middle of nowhere were blowing up. And, there is that. People see it and then they copy it, even though it's probably a pretty bad idea, right?
Yes.
So I was kind of talking about that, but on over the weekend, I think it was on Saturday it started. There was a organization that used to be hackers that actually, if you remember, It Takes a Thief. I think it was a 1970 TV show.
Yeah, for sure.
Where they caught the guy and made him, do like spy things. Of course, he had to break into places. So they basically, it takes a thief to catch a thief kind of thing. And these 2 guys that actually started this company in Italy sell a great deal of hacking information to people like the NSA and other governments around the world. These things are called 0-day hacks.
0-day hacks. Okay, and so what? Tell me, please, and everybody else. What does a 0-day hack? What does that? What does that mean? What does that entail?
That means that there's been a vulnerability since day one. Let's say like Windows 7 came out.
Yeah,
they're still finding out about hacks that existed from day one that have never been fixed after 3 years, right?
Okay, yeah.
So there's a lot of these things that never get. If they don't get publicized, they don't get fixed, right? The squeaky wheel gets the oil.
Sure.
What this company does is find out a lot of these 0-day hacks by hanging out in hacker chat rooms, sending their people like spies, finding out these 0 days, and then selling them to governments like our NSA. And our NSA, instead of telling everybody to fix them, uses them themselves so they don't want them to get out. So there's this horrible conspiracy of people that are just so sure that there's an atomic bomb going off every minute, the whole Jack Bauer kind of thing, right?
And what makes these 2 individuals from Italy so What makes them unique or different than, or these guys just happen to be, just like two other guys that are.
They had all the keys to the kingdom, and they got hacked this weekend by other hackers.
Oh, they did. They did. I see.
Yes. Now everybody's been kind of that follows the security in computers is now worried. We hear everybody that says, okay, all your credit cards were hacked, right? You need to change your PIN number. You need to do this. You need to change that.
Absolutely. Yes.
But not everybody knows what they got from these guys, but these guys had literally the keys to the kingdom, everything that the NSA knows from them, those hackers got. Right? And there's nothing worse than a hacker scorn, to rip off a phrase. And they've ticked off, of course, the hacker community against them because these guys have been hiring their own people to infiltrate other hacker communities to get these hacks. And so when these people start seeing them make money off the stuff by selling it to governments that they did, they were rather ticked. So now while it took, what is it? It's been an hour?
Yeah,
or longer.
It's been about 2 hours, almost 2 hours, really.
It took all of 5 seconds for them to run to the microphone saying that this isn't a hack.
Sure.
Yeah, they don't even. I'll guarantee you that it took 15 minutes for them just to shut the computers down. Plus, now start going through the logs and bringing back systems up to see what did happen. They have no idea whether it was a hack or not.
Sure.
But we know that they have lied in the past. Russian hackers.
That's right. And so, folks, I don't know that we'll ever really find out the true story. But if there's one person that will ferret it out, it is David White. So that's even more reason.
I was going to say the Russians got in basically a nuclear bomb in the NASDAQ in 2010.
Yes.
And if it would have gone off, it would have been weeks before we could have traded again. It would have been something akin to 9/11. Where it took several weeks for trading to come back on. It was accidentally discovered before it went off. And everybody knows the Russians put it in there. They did not set the timer to go off, but they did get it installed there. And, although, it took 4 years for that information to leak out. But when they shut the systems off that day when they discovered it and basically got it out of the system, we never heard anything about it. It was just something like we heard today.
Sure.
We know from congressional testimony that all these folks will lie to us because they don't want to they don't want to yell fire in a crowded theater. But we don't know it either. Like you said, you may not really ever know the truth.
Yes.
Occasionally, things like this do leak out after time. But we know that both the NASDAQ and the NYSE lied to us on that day in 2010. This was after the flash crash, sometime in September or October of that year. But
well,
David, hey, break here.
Yeah. Look, hey, thanks for coming on. Folks, stay tuned. Listen to David's show at 2 o'clock. I know additional information is there, but and thanks for coming on and just at least sharing with our audience, some of what's going on out there. All right, my friend?
You bet.
Okay, thanks. Folks, this is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, and thanks again to David White for just coming in during that first segment. Don't forget, David does the show every day, 2 to 3 p.m. Here at TFNN, so I'm sure he'll have more feedback, more input out there. The markets are trading. No idea whether it's going to whether volume's been impacted. It has to be. You would think that it would be there. A lot of folks are taking measures and just saying, "Hey, I'm not going to trade when 25% of the market volume isn't out there." Who knows? Here's what we can do. We can report, at least take a look at what the markets are doing, perhaps more so what they did yesterday, levels that we should be taking a look at and paying attention to. So why don't we get right to that? And in doing so, let's first start off by taking a look at the 4 ETFs here for the daily charts, the Qs, the IWM SPYs, and diamonds out here. Here's what we know that took place yesterday. We had Turnaround Tuesday, so that certainly lived up to its name out here. And on Turnaround Tuesday, as we took a look at, the Qs, everything were testing swing points. Now, in the case of the Qs, price was testing the swing point from May the 6th. And if we take a look at that low was 106 even Steven. Now, that low was tested yesterday with the about volume of 44 million shares. So you had 44 million shares. That was testing 42 million shares. So slightly more volume. Still, nonetheless, you got a swing point that was tested with volume. Today's volume in this inside the Qs, 21 million shares. We're 3 hours into trading out there. At this stage, you're trading with inside that swing point from May 6th, the top of which is 107.95, the low is 106. As long as price closes, volume or not, underneath 107.95, it says that the low of 106 gets tested, maybe even the swing point high from March the 26th, which is 105.70. That's its message, whether it's volume or not. Now, yesterday's low was very important. Yesterday's low is important because it formed a hammer candle out there, and any close below a hammer candle says you're going to go down to the next level of support. Now, in the Qs, that next level of support, quite frankly, happens to be the March 26th swing point, which I'm suggesting to you that the top of that may get tested. Whether or not the bottom gets tested, that I don't know. 104.24 is that number. But if you close below the hammer candle, that's the next level that you would be looking for. That's what's going on inside the QQQE. Now, by the way, if the Qs today, sometime today, and here's where it's going to get a little interesting, if the Qs today go down and test 106, we've only gotten down to a low of 106.17, so we don't have a full test there. If the Qs are able to get down and test it, get back above 106, do it with less than 42 million shares, you're going to have a test of a swing point on light volume, a rejection of a swing point on price and volume. Now, whether or not, we can use that as an official test on a day like today, I can't say. Just don't know. If we take a look at what's going on inside the IWM, as we mentioned yesterday, it too formed a hammer candle. So the hammers are abound. They're all over I won't say they're all over the place. The interesting thing is they are in the indices and the index ETFs. I did a scan last night of each of the 500 stocks inside the S&P, each of the 100 stocks inside the NDX 100, which I believe there's 107 stocks in there. Each of the Dow 30 stocks, just to see how many individual daily hammer candles I could find, and it was just a handful. Really, I was really quite surprised. Maybe I need to run that. Maybe I need to run that today. Maybe last night it wasn't picking up all the data by the time I ran it. But in any event, that's neither here nor there. We're talking about the index ETFs. We're talking about the indices out here. With regard to the IWM, yesterday was very close to testing the 121.49 level. Got down to 121.53, missed it by 4 pennies. But volume was large. 39 million shares was going against 34 million shares. That says, it still continues to open up the test out here. Now, that test, by the way, of 121.49 is the swing point high for May 6th. So the low, by the way, is at 120.24. So testing that, rejecting it with less than 34 million shares, you'd have a rejection on price and volume. Volume looks to be fairly strong inside the Russell 2000 today. And so it doesn't look like it would be a light volume test if, in fact, we saw that take place today. If we go take a look at the SPY out here, a SPY yesterday getting down, testing the bottom of March 26. That had 153 million shares. Yesterday's test was on 173. So coming down, testing a swing point. It rejected on price. It did not reject that level on volume, meaning it had heavier volume. And it closed today below 206.37. That says 204.12 gets tested one more time, at least one more time out there. That's what's going on inside of the SPYs. Hammer candle inside the SPY as well. You close below that, a little different story than when we looked at the Qs. If you close below that, that actually brings into play the swing point from February 2nd, 2015. That's somewhere in the 202 to 197 range. We got to cross that bridge when it comes, should it come. This is Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow off 185, S&P off 25, Composite off 66 points. Let's go back and take a look at the Dow Diamonds. Now, in the case of the Diamonds yesterday, again, a test of the swing point here from March the 26th. What else was it testing? Anything else? No. March 26th. I see this little gap up here from February 3rd. But a test of that had 6.6 million shares. The test yesterday was 7.7 million shares. You've got a test today for sure. So we have seen the Dow Diamonds get down and test 175.46. You're trading just slightly above it. Volume today about 3 million shares thus far versus 6.6. We already have had a rejection on price and volume. That was 2 trading sessions ago during normal trading on July the 6th out here. So we've seen a rejection of that swing point. But yesterday's volume pushing lows in essence, having a hammer candle. It says that low is very important inside of the Dow Diamonds. That's 174.44. Now, you know, Steve-O here is looking for a nice summertime low. And as of yesterday, I would tell you that that bottom was put in. With regard when you have things like this take place, such as the New York Stock Exchange shutting down, canceling all orders, to me, that's when kind of like anything now can happen, right? What the heck is going on there? You nor I, we haven't heard any type of good explanation, nothing that is truly plausible out there. So, you got the combination of nothing. They say there's no coincidences, right? No coincidence that United Airlines system was down. You've got the White House you've got everybody monitoring the situation as they should. It's financial markets, right? So I now say I still believe that a bottom is forming. The message of the markets couldn't have been more clear yesterday with regard to its price action. Greece, forget, whether it's Greece, whether it's China. Let me show you something interesting about China. If we go now, how about that Hang Seng last night? The Hang Seng down, 1,800 points? What was the number? 1,400 points. My apologies, Mr. and Mrs. Hang Seng, down 1,458 points, nearly 6%. Now, with the Hang Seng, here's a weekly chart, just to give you an idea. Now, that's the Hong Kong stock index out here. What the Hang Seng, and this is a weekly chart, by the way, that we're taking a look at. You can see inside the Hang Seng, if you come all the way back to its lows, you're going to see two different, in essence, trend lines on my screen. You're going to see the channel lines on a weekly basis, and those are the yellow diagonal lines going across my screen. Just slightly below that happens to be the trend line. So you've got two different trend lines. Price came back earlier this morning and it tested that level. Is that going to break? I don't know. That level has held, in essence, as a trend, which began back in 2008. That trend really formed back in October of 2011. That trend line was touched back in June of 2013, and then again today. If you see it close below that trend line and the channel line out here, that says you've got some other trouble. Certainly the trend to the upside inside the Hang Seng would be over. So, it's more than just taking a look at price. It's about looking at patterns out there to understand. If you were to go back and take a look at the Hang Seng the last several times down to test this level of its trend line, that is where, look, selling fear is easy. Buying fear is the difficult thing to do. If you were a person that was going to buy fear out here and you were just going to look at trends at levels of support, what I can tell you is the Hang Seng. I'm not telling you to go out and buy the Hang Seng. But if you were a person that weeks ago wanted to buy the Hang Seng, what I can tell you is that prices come back down to a trend line that has been tested and held, and it's been around since 2008. Does it hold? I don't know. If it doesn't hold, do you get out if you try to take a long position? The answer is absolutely yes. You wait for some other type of signal. But what the Hang Seng did here early this morning, it got down and it tested that trend line out there. Much like if we take a look at yesterday's markets, I showed this chart, but since today's trading is somewhat, a little bit less clear than normal days out here, let me show you this chart. Let me first go find it. I think I posted it right here. And this with regard to yesterday was an unusual day, not in that it was turnaround Tuesday. And tell me that that I saved it, and then I've got it here. Oh, I know where I put it. I put it in a different. I've just got to go to my other trading system here. I think I put it underneath the daily charts out here. Here I did. So yesterday was really quite an unusual day in that we saw all four indices. If you're watching us on TigerTV, let me try to blow this up a little bit on my chart out here. And you're looking at the right-hand side. Let me get my cursor going here. You can see that yesterday, the top portion of the chart is the Dow Jones Industrials. The next panel down is the New York Stock Exchange. The panel below that, the S&P 500. The panel below that is the NASDAQ Composite. You can see that all four, if you're watching this in high def on Tiger TV, that all four of those indices formed a hammer candle. Now, in some cases, like in the case of the NYSE, it was after the completion of an A to B equals C to D to the downside. I'm not showing you that pattern here. And the case of the Dow Jones Industrials, that was after the formation. We're in your seventh wave, your G pattern to the downside. If you don't take out yesterday's low, you'll have a confirmation there, just as we do inside the NQ, not the NQ, the ES, the YM. Maybe we do in the NQ. I can't recall off the top of my head now. Here's the point. I went back and studied the charts, as you know, like I always do. Went back and took a look at the charts going back how far back could I go? I don't remember. I think it was back. about 15 or 20 years worth of data, 15 years worth of data out here to see if we had any other incidents when we had hammer candles form all on the same day out there. And there were 5. Yesterday was number 6 out here. And of those 5, there was only one time was there a failure. Now, is this a coincidence or not? I'll show you the failure out here. And it was August 2011. Oh, what the heck went on here? Let's see here. Yeah, so give me a second to get back there. Oh, that's what I did. I expanded it out like this. Let me try to get back into that's 2000. I'm already back to 2006 when I do that. That's not okay. Here's 2011. Let's see if I can do this. We'll expand it out, and I'll get everything. Try to get everything posted on the system here so you can see it. It's just easier if we can take a look at this. Now, in August of 2011, give me a moment here. Let me pull this back. See if I can expand it out just so you can take a look at it. In August, and I gave you the specific day, in August of 2011, it was August the 4th. So now if you're taking a look at my cursor, my crosshair, you're going to see that all 4 indices, Dow Jones Industrials, New York Stock Exchange, S&P 500, NASDAQ Composite, they each form a hammer candle on that very next day. Now, during August of 2011, you may remember that it was a European crisis that was going on. You know, it was in the papers every single day. All holy heck was breaking loose in Spain and Italy. Yesterday, what was the influencing factor? I don't know. Was it Greece and pulling out of the euro? Was it China? I say more Greece than it was China. It doesn't really matter. What we both know, what you now know, is that there's only been 5, yesterday being number 6, occasions when we've had all 4 indices form a hammer candle. Now, what's a hammer candle? A hammer candle is just simply a single bullish reversal candle. Most of them are either 2 candle formations or 3 or multiple candle formations out there. In the case of the hammer, the shooting star, it's a single candle. And it tells you that the market is trying to form a bottom out here. It is feeling out a bottom. And that is why the expression that we like to use, when you close below a hammer candle, if you're long, you're wrong. Because it was the sign of where bulls really wanted to go ahead and defend their position. This is nothing more than the game of risk. Hey, couldn't be any more true than today, I suppose, with the NYSE shutting down. This when it comes to trading and investing, risk is the only thing that you can manage out here. And what you and I like to do is we like to utilize these charts because what happens with regard to charts, it's a way for bulls and bears, buyers and sellers to communicate to you and I. All we have to do is read the candlestick patterns out here. Now, in the case of August of 2011, you saw the very next session, that hammer candle gave way. You saw it close below it. Prices went ahead and they moved lower. We're not going to go back and try to figure out where they move lower to and why. I just want you to know that the other times, which are, 5 times makes a fairly small pool of instances, but I can tell you 4 out of 5, 90% of dentists, they recommend that you brush your teeth twice a day. Hey, 90% of hammer candles, in this case here, where it all occurred on the same day across all 4 indices, led to bottoms, significant bottoms inside of the market. Will yesterday be the same? Look, as long as those hammer lows hold, and they have at this stage, they have been tested, but they have not been taken out. That doesn't mean that price can't go down and test it. As long as there's a close above that hammer candle, it is to be respected. Now, I felt a whole heck of a lot more comfortable up until about 11:31 or so when the NYSE started saying that trading was halted out there, because I don't have a clue what that really means, why they've shut down, what the glitch is. Is it a glitch? Is it something more robotic, as David White might be able to shed some light and point out to us over the coming months here, because I know he'll dig into it and try to identify it and figure it out. I don't know. But I just know that when things that are so unusual occur, that you have to step back and say pause. So here's what we know. We know that yesterday's lows are very important. We take a look at those daily charts. And if they get taken out, in fact, if we just simply go take a look at, I don't know, what would be the worst case scenario out here, if we can find it. I don't know. Well, I don't know that I can find it. But let's take a look at the Dow, because the Dow had two hammer candles in a row out here. You had the hammer candle that formed on July 6th, and you had one yesterday. Well, you know what it says? It says you come back and you test these lows back in the 17,000 area. Those would be the lows from February 2nd, as well as the. Don't pay attention to the volume on my screen. That's not accurate. I just don't shut it off because I switch back and forth here between individual stocks, ETFs, and so forth. But the lows out here of December 16th, 2014 as well, the 17,067 out there. So there's your there's really the most important aspect of what I can share with you, shed light on with regard to yesterday. If we switch over, take a look at. Let me switch back to a couple of other charts out here. Get to a different trading workspace. If you want to know what happened this morning, I will share that with you. Where did I put that chart? Where did I put that chart? Here's what happened. Here's what actually occurred this morning. If you were wondering why price went down and stopped, now here's a 30-minute chart. Whereas we were looking at three indices, here's three futures contracts. S&P, top portion, center portion is the NASDAQ, bottom portion is the Dow. Now, after making a nice high last night at about 4 o'clock in the afternoon inside the ES Mini, right around that time period, if you take a look at the S&P futures continue to trade lower. Here's a small little hammer candle. Now, look, during the trading hours of, between 11:30 and midnight, and there's not going to be a lot of volume. So the candles that form there, bullish or bearish, I don't really spend a whole lot of time looking at those. But if we do take a look at what took place here when Europe opened last night, and in the case of the ES Mini on a 30-minute chart, you've got your seventh wave formation to the downside. That letter, which is in the G, the key of G, the market likes to sing, or we like it to sing, inside of the key of G, because it gives you a nice risk-reward opportunities for trading. But those are the lows that are in place. Those lows have not been tested. We talked about hammer candles on a daily chart. Now we get to see hammer candles on a intraday period chart out here. We've seen a test, by the way, of the NQ lows. That took place out here during the 12 o'clock, the 11:30 to 12 p.m. session. That level here has been tested, and that has held that hammer candle as it should. If we see closes below that, that says you go back and you run down and you test the lows of yesterday, the ones that came on, I think, they started before my show. They started at about 11:30 or so in the morning. So that's what is going on from an intraday basis out here. Let's go see what else we can find. Let's go take a look at currencies out here. With regard to currencies, let's go look at the euro versus the U.S. dollar. If we take a look at the euro, U.S. dollar, see what's going on here today. Look, we know that the euro has broken through its rising price channel. Had a nice little gradual, 40-ish degree rising price channel. It held all the way up until July the 1st, when you break an area of support. Typically, you go back and you'll try to get back in, which is exactly what the euro tried to do, wanted to get back in on its trend. It failed both on July 2nd. It did as well on July 3rd out here. So now, even though the euro is trading up a bit, where is the euro headed to? The euro formed a hammer candle yesterday. So if we take a look at its candle, that's this right here, I would have to say the body of that is probably just slightly above twice the size of that wick. So Stevie's going to call it a hammer candle. That was testing the swing point here from May 27th. So the key level for the euro to hold, because if you close below that hammer candle says you go to your next swing point, that would be the price point of 108.19. If the euro is going to crater, you need to see a close below that hammer candle and a close below that May 27 swing point. We know the change in trend has occurred, at least with regard to that rising price channel. And now you know, because you listen in on the show, you know that there was a hammer candle that formed in the euro, and that makes yesterday's low very important. Hey, how about that Japanese yen versus the U.S. dollar? That thing's been taken all day long. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Let's go with the assumption that the close is somewhere right around here, where we're trading right now at about 2 o'clock in the afternoon. And if we take a look at the Nasdaq Composite, we pointed this out yesterday. Of course, we saw a big turnaround Tuesday out here, so the composite did not close, at its lows when we were taking a look at it at about the 1 o'clock time frame. But as we take a look at it right now, and I want to point out to you, you're going to take a look at the Nasdaq Composite. The bottom portion of my screen is the actual price oscillator. The center portion here, which I'm going to shrink, happens to be the summation index. Let's just take a look at this price oscillator reading, which can be used to determine overbought and oversold levels out here. And if you come take a look at the bottoms that have recently formed, significant bottoms that have recently formed inside of the NASDAQ composite, I'm going to just take you back into, now it's trading at, that price oscillator is down at a minus 63.11. If you take a look at the reading at the close on January 15th out here, well, I would tell you what that is. I just have to turn my box on. There we go. You can read it on my screen as we speak right now. That reading was minus 62.74. So we're trading just slightly below that. I would say that the bottom that formed back in January of 2015, you put that together with all the hammer candles that we took a look at yesterday. So until those are taken out, the edge, quite frankly, goes to the mere fact that the market's forming a bottom out here. Until they are taken out, that is its message out here. You put that in context with what's going on with regard to the price oscillator inside of the NASDAQ composite. You're down at a trampoline impact area out here. If you take a look at what took place back in October of 2014, actually the price oscillator had gotten down to the level of minus 66. It did that back on October the 10th out here. We did see price move slightly lower, but once I'll go. That's a trend line. Which, well, if we're going to put a trend line out here, here's another way to be able to judge. Let me do this in red. Dress this thing up in red. This red line. Here's the red line. If tomorrow. Yeah, you know what? I don't know. That's really not fair. That's not a fair trend line. So I'm going to just erase it out there. But let's continue to go back and take a look at these levels out here. You come back into the price period of July 17, 2014. We saw a bounce. All this here suggests that the between the hammer candles of yesterday, between what we're taking a look at as far as the price oscillator reading, that we're going to see at a minimum a bounce. I think that it's a bottom more than it's a bounce. I'm going to I'm going to reserve judgment until we really see what the fallout is with regard to what's going on inside the New York Stock Exchange. I know that everything else is being is trading. It's the psychology and it's the mentality of individual traders, of large institutions out there, and that's the piece of it that is somewhat unknown out here at the moment. But if we didn't know anything, because let's face it, years from now, we're not going to remember what took place. Most of us won't remember what took place on June 8th. In my case, it's more like by Monday, I won't remember what happened today on Wednesday. Maybe it's Saturday when that piece of memory just simply goes away out there. And with regard to the VIX index, everything pretty orderly. We know we've got two shooting stars. That's setting up a level of resistance at 1980. Unless that area gets taken out to the upside, we know that that's an area of resistance out there. And with regard to the rest, maybe David has figured out some items as he's been searching around. So stay tuned for his show. The Dow's off 158. S&P's down 22, composites off 56. It's hammer time. At least yesterday it was hammer time, and I'll look forward to seeing you tomorrow afternoon. Have a great Wednesday, folks. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.